Everyone, hope you are doing well. Welcome to our welcome to this final stock review and analysis for 2021. My name is Jermaine. I'm the founder of Learn, Grow, Invest. And today we're going to be reviewing the Spur Tree Spices Jamaica Limited IPO. It's brand new, was announced maybe 3 days ago, I think it was. So I didn't really have a lot of time to go through this one, but the prospectus was quite an easy read. So, I'm definitely going to link it in the description of this video. It should be there already. So definitely I recommend before you make a decision on this IPO to read through the prospectus, or you can pretty much just read along with me. So I'm going to be going through it now. And so, yeah, let me see if I can get some things in place here. It's been a while since I've gone live, guys. Bear with me. Okay, all right. So we'll be right back. All right. So again, if it's your first time here, welcome. I'm Jermaine, and we are a Bible-based investment community. We focus on financial literacy and education. We do stock reviews and analysis all the time, just like this one. So we're going to walk you through step by step the prospectus. Now, typically we don't cover everything that is there, but we're going to go through it. The relevant information I think you'll need to at least get at a first glance to be able to make an informed decision. The benefit of going live, of course, is that we get to take your questions at the end. So if you have any questions, post them in the comments, and I'll try to get to them. For those who are having issues with their application, let me know as well, and I'll try to help you with some of the things I've been able to figure out when I was going through the process myself. So, as custom for all of our live sessions, we open with a brief word of prayer. So I'm going to do that now. So, Lord, we thank you for this day. We thank you, Lord, that we have the opportunity to invest and build wealth. So I pray, Lord, that as we go through this, you'll give us knowledge, wisdom, and insight, so we'll be able to make the best decision. In Jesus' name, amen. All right. So, let me know who's here. I haven't, spoken with a few of you in a while. So, let me know who's here in the comments below. Are you interested in this offer? Let me know. All right. So before we begin this review, I have to state this disclaimer. The information here is shared for discussion, education, entertainment, and illustrative purposes only. I am not a licensed financial advisor, so anything that's said here should not be construed as professional financial advice or solicitation or recommendation to buy or sell any securities, including Spur Tree Spices Limited. All right. So, as I mentioned, as a company, we're going to go through today, and we're going to go through, this is funny. So we're going to go through the 5 different areas here. There are some additional things that I'll add here, that shows you that we did this in a hurry, right? Yeah. So we're going to talk about the company a little bit, who they are, how long they've been around, their product services. So I'm going to start with their website. We do this before we review every single stock, right? We're going to look at the offer, how many shares are available, who they're available to. So they're trying to raise 353 million, but not all of it is available to persons in the public. So I'm going to look at that makeup. We're going to look at their financials. They gave us a nice summary of their financials for the last 5 years. As I said, this prospectus was an easy read. I don't know if it's just because I've read so much in the past that this one was just, it was a lot easier to read. So the numbers, nice and easy to understand. They summarized it quite well, so I'm going to go through that. They speak briefly about their dividend policy. If you're a dividend investor, it's going to be extremely important for you to know. So, stick around for that. We're going to talk about briefly, I guess, some of the potential risks that this company may face. Now, every company has some form of risk. It's actually included in every prospectus. There are certain types of risks. So we may touch on 1 or 2 of the key ones that you may need to take note of. And then from that, I'm just gonna, tie together all of the information that I'll go through to try and tell like a story about the company, and then I'll share my own thoughts at the end. So again, please take the opportunity to share this video. We try to get this video out for you because I thought persons may want to hear or understand our thoughts on it before they make a decision. And since it's gonna open on the 29th, we didn't really have a lot of time. So, share this with anyone you believe may be interested in the IPO. So starting with the overview of the company, as I said, it's that's where we always start. So it is a Jamaican company which has been in operation for the past 15 years. The principal activities of the companies are the production, distribution, sales of pretty much seasonings, sauces. They also have juices and some other products as well. So the company was conceived to satisfy the need in the food service industry, and you'll see from the experience of the managers, their background in the food and service industry, I guess it makes sense here. So they want to offer consistent quality and authentic Jamaican flavors. They use the finest fresh local ingredients to produce quality sauces with natural true flavor, with consistency of a homemade product, right? So a few things stand out here. So Jamaican flavor. So who are they appealing to here? Think about that. Maybe persons, overseas, and it says later that about 90% of their revenues are from overseas customers, which tells quite an interesting story. But they're targeting those looking for either a Caribbean flavor or a Jamaican flavor in terms of their meals. And they want to give it a feel that when you cook that meal, it's a homemade product, right? So the products were developed to give a balance of both flavor and heat to appeal to a wide cross section of the market, both home and abroad, right? So so all of this information, by the way, is from the prospectus. So you'll actually see it when we get to that document, right? So again, it says here that the signature seasonings offered to caterers and restaurants, consistent quality end products, reduced preparation time, steady pricing, and simplified cost and inventory control. These same benefits are valued by home chefs, including working homemakers, professional singles, and anyone looking for a simple, easy to cook, quick, tasty Caribbean inspired meal. So again, you're understanding a little bit about their target market right there. And all objectives are consistent with the company's value proposition of a convenient, quality Jamaican products offered at a reasonable price, right? So it's speaking here now about the company's their base of operations. So it says here they have a fully established retail base in Jamaica through its various distribution channels, and we'll look at their distribution across the world soon. They're actually a page where they share in the different countries, which outlets they're at and so forth. So distribution channels to include numerous hotels, restaurants, supermarkets, wholesales, corner shops. However, its major focus remains on the export market, with over 90% of revenue generated from exports. Now, this is actually a wonderful thing, I think, because when you have so much of your business based on export, it means that you've already established a brand globally, and there's opportunities to continue to grow. Now, I notice here that it says, hotels, restaurants, supermarkets, etc. So if they've, when we look at the financials, one of the things I wondered here is what would their revenues look like locally if maybe we didn't have that lockdown situation for the past 2 years. So that's something that we may see an increase over time when things go back to normal. So it says all of their ingredients are sourced from small farmers in Elizabeth, Clarendon, St. Mary, and other parishes. So they are doing business with the local farmers, which is good for our economy. And not only does this provide, well, I think I don't need to read that part there for you. All right, and my last snippet here, I believe, is saying that so over the years, the company has deepened its distribution relationships, which has seen the establishment of strong listings with companies such as Jetro Restaurant, Depot, Cash and Carry Chain, ShopRite, Food Bazaar. So these are the list of companies that they've built relationships with. And as I said, we'll go through a slide later on where we share the different outlets that they're in. So they also have distributors in the US, so Texas, Florida, and Atlanta. However, their products are available in several other states through sub-distribution channels. All right, so again, you're understanding their business model here. They're a manufacturing and distribution company. So they seek to build these partnerships with distributors to get their products out. So, look at this as opportunities for them to form even more partnerships. So think of the big chains of maybe supermarkets or restaurants, etc. If they're able to form those partnerships, then there's opportunity for them there. And the company also offers a unique marination hot food program in ShopRite and Food World supermarkets. I didn't really look into that too much, but maybe I'll do so at a later date. All right. So that's the company overview. I wanted to actually look a bit as well at their website. So let me bring that up right now. So we always look at the company's website. I think that's a very good place to start when you want to understand the company. I'm going to zoom in so that you can see it a lot better. So the link is spur3jamaica.com, and I'm actually going to just remove Oh, you're not hearing me. Sorry about that. Thank you. All right. So yeah, I'm just gonna stay on stream there. Yeah, so I was saying here that their website is pretty much just an overview of the products that they have. So whereas with most companies there would typically be an investor relations section, I figured that will be added at a later date. So I was saying that their products are kind of grouped into three main areas. So the Season Easy would be their seasonings and marinades, and you're seeing some of them here. You could click there to learn more. Then you have the Get Sauces, that's the sauces and the jellies. And I was saying that my wife actually purchased one of the jellies recently. I don't remember the flavor though, but it was pretty good. And Make It Easy. So that would be like the tinake or the kalaloo or other things there. So those are their main three groups of products. They did have and they have these blends that are done for like the service industry, for those who are running maybe a kitchen who maybe need a larger quantity or size seasoning. They're able to purchase it. And yeah, so it's really just a showcasing of their brand. If you want to know everything that they have available, you can check it out. And so this is where they show a list of their distributors. So they seem to only have one distributor for Jamaica listed here. In the US, these are their distributors. Canada, UK, Cayman, Costa Rica, Australia, etc. So I look at this as an opportunity for them to expand. They seem to be very, very aggressive in terms of the countries that they want to be operating in. So that to me is a good thing. Look for more of those in the future. And they've actually recently purchased a company that we'll speak a little bit about later on. All right. So let's look at the offer details, right? So that was just to wrap up the overview of the company. So they're seeking to raise 335 million. So they are issuing 335,391,848 shares at $1 a piece. I mean, simple to understand there. The thing is, though, only 177 million out of that is being made available to the general public. Now, what that means is that the rest of it is reserved. We'll go through those pools soon, but essentially what that means is so 335 million is not a lot to begin with. And then when you bring it down to 177, I think it's going to be, I mean, it's not a lot of shares, right? So let's just put it that way. All right, so out of the amount that is reserved, there's 108 million going to GK Investments. They're the lead broker for this IPO. You have key strategic partners, 40 million, and Spur staff getting 10 million. Now, what they've said is that if these aren't taken up, so let's say that there is any pool here that doesn't take their full allocation, it will go to the next one. If it's not taken up, if all of these are fully used up and their shares available, then the public may be able to get more. I'm honestly not seeing that as being very likely in this case, but you never know, right? And the total number of shares that will be available will represent about 20% ownership in the company, and we'll speak about that a little later. So this was very interesting to note, right? What they did to get the number of shares within the company, they pretty much did some restructuring after their AGM on October 8th, and what they've done, so they would have done a division of the share. So they've essentially took each of the existing shares, split them into 6,036 ordinary shares. So one share becomes 6,036. And then that's how they were able to allocate enough shares to be able to raise the capital that they need. So essentially what happens here is that you identify or you put a value to the company. Based on that value, you allocate a certain number of shares, and then you can make those shares available to the public. Now, they also made an important change here, as you see in point 1, in that they made it an unlimited number of shares. So what this means is that they'll have the opportunity later on to make more shares available. And this is very important because if there was a cap on this, then it would rob them of the opportunity to do that in the future. All right. And yeah, I think those are the highlights from here. So this was a share structure. You may not be able to see it, but it's in the prospectus here. So the shares that are pretty much being made available for sale pretty much are coming from Dennis, and I'm not even going to try to pronounce that name. So the Hawkins have made their shares available, and that's how we're able to get access to them through the IPO. So remember, I was saying before, so all of these shares that you see here in this first column here, 222,000, multiply that by 6,036, and that's how you get the number of shares now that are here that they're now able to then make shares available for sale, right? Hopefully that makes sense, right? So as you see here in the first line, these number of shares were would have been allocated, but since they're made available for sale after the IPO is listed, it's not going to be available to this person anymore, but instead this group anymore, but instead it will be available in this pool down here of other shareholders. Hopefully that makes sense. If it doesn't, just let me know in the comments and I'll try to explain further. But essentially, what once you have a company and you've placed a value on that company by whatever split you deem necessary, or let's say I had a company and at first it was just me and my wife who are co-founders for L.E.A.R.N. Grow Invest. We may have started a company with 1 share each. We may now decide to change that structure and say, well, we're going to make, we're going to change that 1-to-1, which would have been 50% each. We're going to make that 100,000 shares each, or 100,000 shares, and we get 50,000 each. We can then now make 10,000 shares out of that 50,000 that we each have available in an IPO for the public to purchase. So our remaining allocation would be 40,000 out of that 100,000 each, which would make up 80,000. So we would have 80% of the company, but the public would have 20%. Hopefully that makes sense, right? So essentially they would have done this restructuring to make shares available, right? And companies do this all the time. So if it is that a company may decide to raise more capital in the future, depending on their policies, they might have a cap, or they may remove the cap to make provisions for the future. So that's essentially what they've done here. And so what they're showing you is what that percentage will look like after listing. All right, so the public, including GK and those other pools, so 20% is being made available through the IPO. And so the thing to note here as well is, as we saw with FESCO, you may have some other directors who choose to make shares available for sale after, by pretty much just either taking their profit or doing maybe you have further transactions taking place down the line. You never know. But the reason why we like to look at this list is that if you see a block of shares available, so for example, if we saw 50 million shares on the market one day, then we're gonna know it's gonna be it's gonna be from one of these persons in like maybe the top 5 or the top 6. So the number of shares, it's important to understand, and there may be some decisions that's based on the percentage of votes, etc. So you just kind of want to know and understand those things. All right, hopefully that makes sense. All right, so this is a breakdown of that 20%, as I would have mentioned. So GK gets 6.4%, or 108 million available to them. You have the strategic partners getting 40 million, the staff getting 10, and then the public, that's the rest of the world, getting access to 177 million. All right. So in terms, for every single IPO, you want to take a look at how they intend to use the money. This is extremely important. They need to be able to justify how they're going to use the funds, and it needs to make sense to you before you invest in the company. So they're saying here that proceeds from the IPO will be used to pay the invitation and listing expenses, which all companies will have. You have to pay the stock exchange, you have to pay the broker, etc. And they're saying that those expenses should not exceed 25 million. That's important to note. There's a debt that they have to repay, which comes up to 169 million. That's more details on that later. And so that 169 million is now split between GK Investments, which is 156 million, and 12 million to reduce a director's loan. And we'll see that later on, as I said. All right, so this is just the same thing that I would have mentioned. And the third piece would be for them to be able to increase their capacity and grow and expand their brand and the exotic brand that they recently purchased. All right, so I'm not going to cover the risk right now. I'm just going to touch on the dividend policy, then we'll go through through the prospectus. So what the company is saying here is that, once they've listed, they intend to pursue a liberal dividend policy of up to 25% net profits available for distribution, subject to the need for reinvestment in the company from time to time. So if there's a need for the company to keep those funds and reinvest, they'll do that. If they feel they have enough to spare, then they may pay a dividend. Where the dividend is concerned now, you want to look at the amount that's available in net profits, look at the number of shares that will be outstanding. So you can use, let's say, the most recent financials, look at the net profit, look at the number of shares, divide that, and you'll get an idea as to what a potential dividend would be if it is they were to make a similar amount and have that available in the future. So that's something you can get an idea as to what you can expect. Look at what the policy states, look at their trend in terms of net income and profit, divide by the number of shares outstanding, and that will give you an understanding as to what you can expect. All right, so I believe that's it for now. Let me just switch to the prospectus very quickly. All right, there was a mention of a litigation. I have that on a slide here. But what they said pretty much is that what they suspect is that in the event that they're not successful in the claim, the damages awarding would not have a material impact on the company, and pretty much that their insurance would cover it just fine. That's essentially what it said. So I don't really see any risk there. All right, let me know if you can see my screen okay. All right, so this is a prospectus. The link is in the description of this video. Now there are two copies that were going around, one where the financials weren't so clear. So this is a link directly from GK's site that's in the description, so you should be able to read it clearly there. All right, so as usual for our prospectus, we like to go through some key areas. So in terms of what I read, I'm going to zoom in and tell you what that is, so that when you're going through it on your own, which I recommend that you do, you will, if this is your first time, you may know some key areas to look at. Now, if possible, read all of it, depending on the time you have. So I thought the letter to prospective investors, have a look there. Forward-looking statements, have a read there. They're just pretty much, explaining that they would have been making some assumptions or assertions for the future. They're to be considered, forward-looking statements. So essentially, it is anticipation, expectation, projection. Don't take it as gospel. I don't know if anybody else would have interpreted it as I did, but that's what I got in reading it. The invitation details, risk factors. So I mentioned that before. So with a company like this, you want to think about the risk that is there. Now, every company is subjected to risk of some kind, right? So you want to just read through this and understand the stock that you could potentially be invested in. What are some of the challenges that may be there? So for example, based on the type of industry they're in, manufacturing and distribution, one of the risks may be natural disasters. If there's a flood, if there's an earthquake, since they operate overseas, maybe there's risk in terms of the dollar and foreign exchange risk. There'll be things like that will be listed in this section. If you've never read it before, it's good to read through that to understand what it is, because you want to be mindful of what you could potentially be looking at to invest, because these things can impact revenue down the line if you don't understand them well. Then it speaks about the company. You want to read through this whole section. Material contracts and indebtedness. It's good to understand what a company's liabilities are. It mentions the litigation briefly, as I said. And then usually we go through the MD&A and the financial statements. Now, it has, thankfully, the Exotic Products Jamaica, the company that they purchased, it actually has their financials as well. They show them separately as well as combine them. So we may be able to look at that briefly, but this review will actually be no more than an hour. So we're about halfway through. So we're just gonna do, I'm not sure if we'll be able to go through the one for Exotic, but you do have the option to go through it. And then the rest after that, you really want to look at the financial statements. So depending on what you see, you may want to do further reading in the notes, because there are some things that are explained in detail. Like for example, there's a breakdown of expenses. There's a breakdown of all the details of the financial statements. You want to look at those, understand them, get comfortable with them, and see how they trend over time. All right, so the first place we're going to look at is, so we spoke about the invitation details already, so we don't need to look at those again. So I'd have summarized most of what's here for you. So this would be just details of the prospectus. Let me zoom into this that speaks about basis of allocation. So it says here, allocation will be on a first come first serve basis. So there are persons who might have mentioned some challenges in terms of applying. I shared a thread on Twitter earlier explaining how you can overcome some of the challenges. So if you're having a challenge, let me know the type of challenge in the comments under the video, and I'll try to see how best I can help you. So it's on first come first serve basis. The applications are online. If the invitation is oversubscribed, then the company reserves the right to allocate shares to applicants on a basis to be determined by its sole discretion, including on a pro rata basis. So depending on the state of the oversubscription, you're going to determine an allocation that they determine is reasonable, and that's how you determine the number of shares that's made available. Now, again, remember I said this is not a lot of shares being asked for. And so my guess is, depending on the volume, the time of year may have an impact. It being Christmas, we're not really sure what the capital base of persons may be right now. But 177 million in our market, I don't think is a lot of money to raise. Well, from the public, not counting the amount that's reserved, right? So, yeah, I would have mentioned that already. Let us move on. All right, so it's speaking to, so this is a letter to the investors, speaking about, saying they're extending an invitation to you. Let me zoom in so it's easier to read. So they're extending an invitation to you. This is the amount they're seeking to raise. It speaks about their products. If it's your very first time hearing about them, I recommend you read it. It's very good to understand the company. So it says, mentioned this before, the countries that their products are available in. And so it's very clear and easy to understand. There's nothing that I read that I was like, well, what was that? Very clear to understand, easy to see, where they're going. And that's about their core principles. All right, so let's look at outlook and growth. So they've mentioned here that the outlook for them is very positive, and would have seen, there is just a commentary that's been on social media about the company. The outlook for a lot of persons is positive for the company based on how they've grown over the last 5 years, and based on just their product, their brand in general. They would have recently completed the purchase of Exotic Products. That's an ackee factory, so they make ackee, and it is a highly demanded product, and they think they have an opportunity to essentially bring them to a point of doubling their production over the next 2 years. So the way to interpret this, you're going to look at the numbers that Exotic would have done, and they're anticipating a doubling. So what you could possibly do is look at the projection for Spur, look at the financials for Exotic. You know, if you believe it can double those numbers, add them to what Spur would have been projected to grow over that time, and you may get an idea as to what revenues would be like over that period. So this combined with their plans to expand and grow the current Spur product range, adding new products to what they already offer, while expanding current markets both locally and overseas, and accessing new markets should significantly improve our sales and profit performance in the coming years. Now, that's definitely something that's good to see, and you can kind of understand from how they've developed the brand so far. They are trying to get to a certain type of market. You know, Jamaicans are one of them who want to, you know, have a taste of home, or persons who want to get that you know, Caribbean flavor for their meals. All right, so it's mentioning here in terms of benefits of listing, the fact that because they'll be listing on a junior market, they have the benefit of a 10-year tax relief. Now that tax, they would have to meet certain requirements to ensure that they're able to take full advantage of that. And it's saying, you know, assuming that those conditions are met, in the first 5 years, a company will not be liable to pay any, and then in years 6 to 10, they will pay half the usual rate. So we see this for companies that list on the junior market. Them not being able to pay taxes looks very good on their income statement in terms of net profit. So, you know, that's likely to bode well for them, at least for the first 5 years, maybe even the first 10 years overall in terms of their performance. So that's something of note there. And in terms of how to subscribe, I don't think I need to go through that. All right, let me scroll through. They're just here defining some terms. Every prospectus will have this, just defining the terms that you are likely to see. I think those are pretty straightforward. I guess I could probably zoom in. I'd mentioned the word key strategic partners. So I may want to highlight that for those who would not know what that means. So it says here, persons that the company deem key and germane to its operations, namely distributors of products of the company, suppliers of raw materials to the company, and non-executive directors. So they're giving those partners a reward for being, you know, so mutually beneficial to them over their timeline. I think everything else was more or less straightforward. All right, so this is just speaking about, you know, the forward-looking statements, as I would have mentioned. You know, give this a read. So it's pretty much saying here there are things that may impact. So let me show you what I was saying here. So it says, when used in this prospectus, the word anticipates, believes, expects, intends, and similar expressions as they relate to the company are intended to identify those forward-looking statements. Those statements are subject to numerous risks and uncertainties. They're talking about the future, right? So that's all they're saying there. So they're just telling you to take note of those terms and understand what it means. This is just a detailing of the invitation. I don't think I need to go through that. Risk, I would have mentioned this before. Please give this section a read. So I'll just read the main highlights. So COVID-19 risk, we're still in a pandemic. The distribution and shipping delays risk. And these are just potential risks that could affect this business. As I said, every prospectus goes through this to help you understand what is there. And then, okay, yes, this is the one I wanted to zoom in, right? So, so it says issue of additional shares. The directors may hereafter authorize the issue of additional shares in the company. Such shares, once issued, may rank pari passu with and or in priority of the existing shares and may be listed on the JSE. Additional shares could also affect the market price of shares currently being offered. Now they're letting you know, as I said before, there is a potential for this to happen, and if it happens, this is the potential impact that it could have. And then of course they can't put a guarantee on dividends as stated in their dividend policy. It really depends on the needs of the business and whether or not they'll have that cash available. All right, and these are the companies. I mean, I'll definitely take a second to highlight here. So GK Capital is the lead broker, co-broker is Sagicor. So you'll use Sagicor e-invest platform to apply. BDO would be their auditors, Myers, Fletcher and Gordon, their attorneys, and of course everything goes through the JCSD in terms of listing. So I'm not going to go through the section because I would have captured those highlights at the start of the video. If you've joined us after, just feel free to replay that. I guess a key thing here that would have been mentioned is the way in which they've been structuring their partnership, seeking to acquire companies that for example have the requisite approvals that will allow them to expand. That's covered in this section here. So I definitely recommend that you give it a read, but as I said, I'm not going to go through it because we spoke about it before. I will go through this section because it speaks more about the purchase of Exotic. So it says, further to its growth in the export market, Spur recently purchased Exotic Products Jamaica, and it speaks to what they provide. For the 2020 financial year, the company generated revenues of 284 million and net profits of 6.7 million. So going forward now, this is going to be included or rolled into the financials for Spur because I have 100% ownership of this company. All right. Let's see. So this, what they would have done here. So on 2 pages, they would have gone through, given you a roadmap of their history. Very interesting read. I recommend that you go through it. So it spoke about when they started and how the company, you actually see the story of how the company would have grown over the last 15 years. And so it's definitely a worthwhile read. So next we're going to go to, well, the next few pages here covers their products. I would have mentioned those categories already. I really love the presentation of the prospectus. I thought it was a very, very easy read. So we said we'd mention distribution. So all of these in green are where they're currently doing business. And what I see here are the areas that are in gray are potential opportunities for them to capitalize on in the future. And these would be their distributors in UK, in Canada, and Cayman Islands. So, I expect to see this growing over time based on, what we've seen over the last 15 years. And these are some of the places that they can be found in terms of, retail and distribution points. So they spoke about their production, their operation, tools and equipment, quality control, etc. here. Feel free to give that a read, especially if you have an affinity for this, for these types of companies. Speak about the different registrations here, trademarks, etc. We're not going to cover this, right? So this is a part that I would have mentioned, the director's loan and the short-term loan. I'm just going to give you those brief highlights here. So this would have been a part of the use of funds that was mentioned earlier. So the details are here. So the loan and the interest rate and the $12.5 million director's loan, and it was interest free, which is excellent. And this is just kind of explaining the details of the loan agreement between them and GK. So give that a read when you can. The litigation that I mentioned, and these is just showing you an overview of the directors. We're not going to look at this right now, but you want to understand the company who is leading it, their experience, all of that information helps you and helps to either build confidence that the company is in good hands, or to maybe tell you that maybe the company is not in the best hands and maybe you want to look elsewhere. So you always want to read and understand that information. All right, this is where we're going to spend the next few minutes. All right. So this is a management discussion and analysis, and I'm going to do this in lieu of going through the actual financial statements, because this is a review of the IPO and the prospectus. What I likely do is, after the company is listed, maybe the end of their financial year for 2021, we'll do another stock review at that point, and we can go into the statements directly. But I've put everything into the MD&A that you can just get the highlights. All right, so it's saying that despite COVID, the company would have increased its revenue by 22%. And the increase in revenues came from solidification of the brand, improved product placement, and the expansion to new markets. This is a part of their business model, so that's not surprising. They have grown from 2016 till now from 289 million to 700 million in 5 years. That's excellent growth, and they're saying that's an annual growth rate of 25%. The next, speak about the trend in gross profit. So we can just look at the chart. It has gone from 111 million to 187. In 2019, actually went down by $1 million. And for last year, it was good. Operating profit. So the company was able to reduce its operating expenses. You like to see and note these things. So it was able to reduce expenses. That's very good. And the company made changes to its approach in marketing and promotional activities. This was primarily contributed to the decrease in the company's operating expenses. So the company would have transitioned to an online and social media marketing approach as opposed to the traditional print or in-store promotion. So in-store marketing is a lot more expensive than online marketing. So they would have switched that and saved 13 million. And they were also able to save in terms of their traveling and entertainment costs. I assume if you're going on the road doing all these marketing activities, there's also traveling costs in addition to some other costs that may be there. All of that is going down. These are things I like to see. Company has found its new marketing plan to be beneficial, as it has resulted in a decrease in expenditure with no negative impact on sales growth, and as such, the company intends to continue utilizing this marketing strategy. So of course, as you know, digital, you're able to touch everybody in some way, shape, or form. And so they've decided to invest online, so they're on social media, they focus their marketing efforts online, and they're saying that they've benefited from that growth and they have not seen a negative impact in terms of their revenues. So it says during 2020, the company improved its operating margin to 14% from an average of 8% from 2016 to 2019, right? So 2016 to 2019, it was between 27 and 44 million, and they were able to grow that. So, I mean, again, this is just easy to read. The graphs will tell the story, and you can read the summary to get the details on it, right? So it says their earnings before interest, taxes, depreciation, and amortization has steadily improved from 30 million in 2016 to 109 million. So this is, for those who are not aware, this is just a breakdown of so there, when you're going through the income statement, you have different segments of it. So essentially what we're going through as for the last 2 pages are those numbers and putting them in context. Because when we do the regular stock reviews and we go through the statements, we look at those numbers. So what they're doing is highlighting that and showing you the growth and trends over the last 5 years. All right. So it's saying the performance in net profit over the last 5 years largely reflected improved sales along with increased efficiencies at the end of the financial year. Revenue amounted to 701 million. This represented the compound, well, we read that already. This is balance sheet now. So assets, liabilities, and equity, and how they would have been trending over time. I'm not going to spend much time here because there's a summary that is going to come up soon. All right, so this is the one for executive product. Exotic. Why am I saying executive? Exotic products. I hope I've not been saying executive all this time. All right, so these are the numbers for exotic. And you see them here. As I said, I'm not going to spend a lot of time on this, but it will be good to go through these numbers. They would have had a fall off in net profit for last year. But remember, they would have said that their hopes is that within 2 years, they can bring them to a place of doubling revenues. So, hopefully that should have a great impact on net profit as well for them. All right. And their assets and liabilities are here. I really like how they've kind of summarized everything into one. Makes it easier to read. Speaking about the income statement for exotic, so here is where it has combined them for 2021 year to date as of up to August. So you'd have seen the first 8 months for 2020 versus a full year for 2020. So for 8 months, they would have done that would be about 70% of what they would have done for the entire year. So in, I guess, maybe about February next year, you'll be able to see the results for the entire year. The anticipation is that this is going to be really good. But I mean, again, you just have to determine whether or not you believe they can, actually beat that number. It's awfully close already. Gross profit. So, well, profit before tax here would have already surpassed what they did for the entire year. That's definitely a good sign and a good trend. So yeah, everything is looking good there. I think I want to go to the summary now. They would have done a financial analysis for them both there. I think I just want to go to this summary now before we close out. Is there anything here that I wanted to highlight? No, because we spoke about this already. All right, so this is the final thing that we look at. Yes, we're still in good time. So this now would have been this summary over the past 5 years. So typically you want to look here at the trend over that time, right? Trend in revenues, trend in gross profits. So normally what we do for a stock review is we enter this into Excel, calculate the financial ratios to get an understanding as to how it's trending over time, because you don't want to just look at the big numbers. You want to see if there's a healthy relationship between the respective line items. So, I'm definitely going to be doing that, and I recommend that you do the same. If you're not sure how to do it, just check out any one of our stock review videos. And here it's showing the trend for net income. So they've made it very easy by just highlighting the key areas that, typically you'd want to look at a note, and all of these would have been included in the summary that we read already. And then balance sheet, how that would have been trending over time. So as I said, everything looks like it's trending in the right direction in terms of growth, certainly in terms of the revenue, in terms of the income statement above, and in terms of assets and liabilities. Remember, they would have taken, raised this capital to clear some of that debt. So you're going to see that shift in liability for the next statement. And I believe that's it. So this final section here for the rest of the prospectus is just for you to go through and see the details of the statements. I mean, again, I recommend that you go through them in detail. I certainly did, so I recommend you do it as well. What I'm going to share next is an article from IC Inside. I'm going to link that in the chat. I didn't do that as yet. So let me zoom in first. So what you can expect over the next couple of days, usually in the days leading up to the opening of the IPO, brokers will state their review. You're going to see a lot of what we've already covered. They're just pretty much going to take details from the prospectus, summarize them for you, share their target price, and share their outlook and recommendations. I'm going to share that screen there. So this is IC Insider. So they would have, just spoken about the IPO, details of it. We went through all of this already. I wanted to bring your attention to this information here at the end of the article. So IC Insider is saying that the earnings per share should end the year at 11.5 cents before taxation, and puts the PE at an attractive 8.7 times earnings and below the market average of 14.4. And it says they project 18.5 cents earning for 2022 from a profit of 300 million at a PE of 5.4 times 2022 profit, which means loss of profitable trades are baked in, barring any major negative development, right? Of course, we don't know what will happen in the future, but this would be their projection based on, I guess, the information they would have read through the prospectus, right? So that's it, guys. What do you think of this IPO? Now, the things that stood out for me, I'm already familiar with the company and the brand. It's a brand that my wife loves. They have a good sentiment. So from a qualitative perspective, consumers love the brand. Investors seem to be bullish on the company. And so, those are things of note. It doesn't determine success, but I mean, investors being bullish, investors having good sentiment is something that you definitely want to see and appreciate during this time. I know the nominal price is extremely important psychologically in our market. Persons may think, okay, $1 per share, that's cheap. No, cheap is depending on the context you're looking at it. Now, the PE that was shared by IC Insider means that the company would be deemed undervalued based on the average that they would have used. So that's one thing going for it. And the nominal price may also add another layer in terms of psychology for the market. Those things are good. Growth prospects for the company are very good. They seem to be, growing aggressively. That's something that you definitely like to see. They've built strong relationships, strong distribution paths for their product. Very good to see. They're focused on minimizing expenses, scaling those down. They've shifted to a digital marketing strategy. All of those things you like to see. What I'm doing personally is spending time going through the financials, understanding, where the money is going. I'm definitely going to be interested in seeing how they perform for 2021. There was something that I noted in an interview that I saw, and I mean, usually companies wait for a strategic time to release an IPO. So in my estimation, I think they're shaping up maybe to have a good year, and so they thought it would be a good time to release. Investors get a nice return, supposedly, and then that would just again just build up sentiment and buzz around the company. So I mean, I thought that was interesting. The timing though of the release, I'm wondering if maybe the number of shares available versus time of year. Maybe that's why this would make it a good time of year to do it, because as I said, 177 million to raise in our market is not a lot of capital. So what I did is actually looked at the IPO for like the lab and for Lumber, and say, you know, how much they tried to raise, how much was allocated, to give me an understanding of what the suspected allocation may be should I decide to invest, because you want to have an understanding as to how much you're likely to get. My personal estimation, this is not financial advice in any way, but the fact that it's such a small amount of shares, you may not, depending on how much you're applying for, get your full allocation. So just bear that in mind. Speak to your financial advisor though to understand what that may look like. So overall, I think it's positioned very well. I think it's a good company that has growth potential. I think their products have good sentiment in the market, and so it should be an interesting time for the IPO. Well, Jordan, you know, a lot of persons think that as well, that it's going to be a quick open and close. I mean, time will tell. And yeah, I too like it that, you know, a lot of their revenues are outside of the country. So it means that I don't necessarily have to worry about, you know, maybe a limited local market. If they have a global market, then that means it puts them in the best position. So it's a buy for you, Jordan. I mean, that's good to know. I will definitely meet back here in a few months, you know, to talk about how it has done, and, you know, what things we would have seen for opening week, etc. So are there anyone with, you know, challenges in signing up? If it is that you're interested, let me know. I may be able to help you with some of those challenges. I've been helping persons throughout the day. But yeah, that's it. Hopefully this review was helpful. If it was, please give this video a like, subscribe to this channel if it's your first time, share this video with anyone who may be interested. If you are interested, please note that if the IPO is oversubscribed, it may close early. So what this means is that it's in a pre-open stage now. So you have the opportunity to apply right now, even though it opens on the 29th. So if you're interested, you may want to speak to your financial advisor and apply early. All right. So I want to wish everyone a happy and safe holiday season. You know, be sure to spend time with those you care about, those you love. I want to thank you all for joining us this year. So this was a great year for us at L.E.A.R.N Grow Invest. We're at, you know, 2,600 subscribers, over 55,000 views. We've grown on all social media platforms. We had a very successful investor class 2 weeks back. It's been a great year for us, and I want to thank you for being a part of it. And, you know, really, I'm inviting you to join us in our groups. So we're on LinkedIn, Telegram, on Facebook. Join us in those groups. Ask questions. If there's anything that you need help with, we are there for you. And yeah, this should be our last video for this year though, but we'll have, you know, some videos at the start of the year. We're going to be covering things like, you know, budgeting for the year, how to start investing on a small capital base, how to take the steps to build wealth, etc. We're going to be covering a lot of those topics at the start of the year next year. So I look forward to seeing you. So yeah, enjoy the rest of your day, and yeah, I'll see you in the next video.